90% of traders and investors lose money because of this one thing. In this video, we're going to go through what that is, and I'm going to explain how to stop losing money. Guarding your capital is incredibly important. Let's run the numbers. It takes a very long time inside financial markets to create rules. Each rule that you will create is a direct result of losses that you will suffer. You'll find you're going to have a lot of rules. I've been inside financial markets for nearly 4 decades. I've got plenty of rules, and Rule 49 is particularly important. Fear, uncertainty, and doubt, which is FUD, and fear of missing out, which is FOMO, costs you losses. You're in financial markets at the moment because you're a rock star. The markets are really red, and you are here. You are incredible. And every single trader and investor goes through 4 zones to become consistently profitable and to be happy with what they've accomplished. Zone 1 and Zone 2 are the very early zones. This is where we hand the keys to the car to other people to chauffeur drive us around because we think, hey, that's what rich people do. Rich people have chauffeurs, so I don't know anything about what I'm doing, but I need a chauffeur. Now, how does this manifest? It manifests like you will look to influencers, you will look to other people, you will look to the news, but you will not look to yourself. Of course you're going to panic because you've been told, hey, the bottom is in, it's up only. 0% loss and 1,000x return guaranteed. Maybe to scammers, but not for you. It can feel pretty good when the markets are going up, but what happens when they go down? Didn't Warren Buffett tell us rule number 1, don't lose money? Isn't this losing money? Shouldn't we sell? Or if things don't go as anticipated because we're getting chauffeur driven around, of course it's the driver's fault. It can't be yours because you're not in control in the first place. So what happens is that when prices are going up, people think that it will go up forever because all those retail influencers saying it's going to go up forever. And when it comes down, it's going to come down forever. Correct? Nah, it's not correct at all. Price is always moving in a wave. It's going up and down, up and down. Is the bottom in? What the hell are people talking about? Which bottom? If you think about it, it's just a nutty concept. But it suits people who are being chauffeur driven around in Zone 1 and Zone 2. I would suggest ditch the chauffeur. They cost too much money. It takes a long time to ditch the chauffeur because basically you go through mind-numbing losses and you say, oh God, I have to learn. I have to have a diamond mind. Not just diamond hands, but a diamond mind. Then you start to learn about probability, you start to learn about rules. You're not a light switch going all in and all out. You're like a dimmer. You go all in stages. Stage, and you're typically buying on the way down, not on the way up. You make 3-way decision making. You understand the importance of percentages. You understand a lot of different things that when you were getting chauffeur driven around up here, you knew nothing of. But making money and keeping money are completely different. That's when you learn about positive excellence. That will help you to keep money. A lot of people talk about Jesse Livermore, who at one stage, well, the father of day trading, became the richest man in the entire world and then ended up shooting himself later on. Jesse Livermore couldn't keep his money. He did not have positive excellence. You don't want to make it big and then lose it all. There is no point to that whatsoever. So the biggest thing that causes losses is the fear from Zone 1 and Zone 2. And then if we don't know what we're doing, we don't know the rules of the market, we're in trouble because we'll keep on hitting home goals and think that's good. And of course, we need to do more than just make money. We need to keep it. Acting on fear, uncertainty, and doubt in life, or fear of missing out in life. Just don't worry about the markets, worry about just in real life. These two things will make you weak. They will cause you to act against your own self-interest. Inside financial markets, they will cause massive losses. If you're wanting to be chauffeur-driven around, you understand you're inside Zone 1 and Zone 2. Our community doesn't get chauffeur-driven around. Our community knows the rules of the market. They drive themselves. Our community are not retail. They are an institution of one. They know the rules of the market. They are accountable. Let's make it real and let's use an example. For example, Bitcoin. As prices were coming down recently, what do people do when they see red price action? They just assume automatically that it's going to zero. When they see green price action, it must be going to the moon. Red to zero, to the moon, to zero, to the moon. You get the idea. But of course, price is just moving in a wave. But where are the waves stopping themselves out? That is the key. You must have a strategy. You need to know where the structural levels are inside the market. Inside Zone 1 and Zone 2, people learn all about pattern recognition, which is candlestick pattern analysis, but they don't learn about true structure. There's a problem with candlestick pattern recognition. A lot of people will fit candlesticks and fit particular patterns when they don't exist at all. Because they don't know where the structure is, they don't know where the ceiling is, they don't know where the floor is. They do not know how to read a structural fail or a structural pass. Getting a structured, systematic approach to understanding the real forces driving the market is absolutely critical. And as so many people put in yesterday's video, you've nailed it. You know the VIX is in control. So how do most traders and investors jump into the market? They jump into the market like this. They have no structure. They simply don't understand where the ceiling is and where the floor is. They don't understand where structure is going to hit and where support is going to come back into the market. This is literally reactive guessing. When we guess, we always lose inside the markets. You must progress from guessing and fear into knowing. For example, yesterday we were trading around here in terms of Bitcoin's price, and I said, be careful family, because a lot of people were saying the bottom is in. Well, the bottom may be in, the bottom may be out, but if the bottom is in, that would assume that there would only be upward price action inside Zone 1 and Zone 2 thinking. That is simply not the case. It's always structural. If we can't get above, we're going to the structural levels below. And if we don't go below, we're coming back to the structural levels above. Knowing where the structure is incredibly important. Don't forget, these are not brick walls. They're gravitational areas. It can overshoot. Overshoots are relatively common, so it's important not to think that these things are brick walls, these structural levels. The question becomes, what is involved in actually drawing these lines up? Those lines require 2 levels of standard certification. Level 1, standard certification, is all about laying in the groundwork, laying in the rules. Level 2, standard certification, is where the rubber hits the road. It is quite a complex process to draw these lines up. Many people think that it's relatively simple to draw a line on a chart, and many people draw random lines. These are not random. It is the culmination of Level 1 and Level 2 standard certification which draws these lines in. They are the only leading indicator of price because we already know where the structure is ahead of time. No more fear, no more guessing. You already know. For example, Bitcoin is currently 83,479. It has upward structural resistance at 84,204 and slightly above. If we don't get over this structural resistance level, we'll come back to the structural levels below. If we don't hold them, we'll create negative structural attraction back to the 81,866 level. If we don't hold that lower level, we're going to create negative structural attraction, or NSA, to the 79,501. But if we get up to this 84,204 level, we're likely to just flip around here for a while before we can confirm that that is actually structural support. We don't want to come up and tap it and not reconfirm it. You can see this is a loss of confirmation. As soon as we get structural failures, it opens up lower structural levels. And if we get a structural failure that passes through levels, that's called a structural overshoot. This structural overshooting favors a cluster of lower structural support levels to rebound the price. There's a whole science in understanding and applying this. Inside Zone 1 and Zone 2, people who are trading crypto, and particularly who are trading Bitcoin, will only look at Bitcoin's chart. This is called your money chart if you're doing that, but that is suicidal. All charts and therefore markets are intercorrelated and interconnected. When you look inside the cheat sheet and you know how to fill it out, you can decode and master price action. It's absolutely free and it's available from CTKSmethod.org. Let's have a deeper look into this. Inside the cheat sheet, there are 7 rows. Row 1 and row 2 confirm each other. Row 1, if row 1 is spiking, it means that risk off is occurring. The markets are likely to come down. If row 2 is going up, the markets are likely to come up. If row 1 is coming down, row 2 is going up. We expect row 3 to go up because row 4 is going up. And we often look to row 5 as the absolute decider on where the markets are going. As we discussed in yesterday's video, the VIX is driving the bus of risk. You have potentially 12 drivers who can get into the seat and drive the bus of risk. The bus of risk is just a nice way of saying who's in control of the market. Currently, the VIX is in control, and there were some very funny comments in yesterday's video. I mean, the comments from you guys, they were just awesome. Now let's make it real. Let's overlay the VIX futures on top of Bitcoin. Now what I'm going to do, because a lot of people have trouble seeing inverted relationships, you can see when the inverted VIX, I'll just go this way, when the VIX was spiking, Bitcoin came down. This is what caused Bitcoin to come down, but Bitcoin hit a level of structural support. So I'll just invert it again. What you can see is Bitcoin is following the inversion of the VIX. Now, what does that mean? It means, for example, if the VIX continues to fall, Bitcoin and crypto will continue to increase. What's actually occurring here is most traders will react to candlestick patterns without understanding the deeper reasons why markets actually move. The CTKS method decodes the market's DNA through the cheat sheet. It reveals the underlying structure that drives price action, and you can see it here playing out with perfection. Therefore, instead of being reactive, instead of being fearful, instead of having fear of missing out and getting in at the wrong time, you want to become proactive and anticipate moves before they can happen. And how do we do this? We simply know where the structure is. If it's cutting over, we know it's got positive momentum. If also Bitcoin is cutting over, it is likely that the VIX is declining. In this video, we've only looked at the VIX and also Bitcoin, but there's a lot more to it. How the VIX moves is actually hitting all the major market indices, the stocks, and all of the crypto market as well. In yesterday's video, I showed you how you could look structurally and how to keep your eyes on very specific charts that will give you a bit of a heads up onto what the markets could be doing next. We are completely unlike other channels. You are an institution of one when you come here. Our global family understands why things are happening, and we don't FOMO, we don't feel fear. We have understanding. We have intercorrelation and interconnection across all of the cheat sheet components because it's wildly important. If we don't understand what's happening, we'll get absolutely financially butchered, and that is unpleasant. For today's comment, I thought it would be really just so helpful for people to share how they've overcome fear using the method. You can really help to change people's lives and their intergenerational financial fortunes. But everybody must overcome risk first. And when I say overcome risk, it's overcoming the fear of risk. Risk is fantastic. Risk and uncertainty is the only thing that makes us profit. It's just having the right system to deal with it. I'm really looking forward to your comments. And for everybody who commented yesterday, wow, what a community we have. Just awesome. I would suggest that the first thing that you do is fire your chauffeur. Insist on getting the knowledge so you can drive yourself around. Remember, it's your car, it's your money. You should be responsible for it. And also, when you get out of Zone 1 and Zone 2 into Zone 3 and Zone 4, you actually align yourself with institutional strategies rather than being manipulated by them. Inside Zone 3, it's all about understanding things from a structural perspective. Intercorrelation and interconnection give you a roadmap for market mastery. It removes all the guesswork. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.